Good afternoon. Welcome to today's webinar sponsored by OnApproach. My name is Pete Kears and I'll be your moderator today. I'm Senior Engagement Manager for OnApproach. OnApproach is a QSO focused on data and analytics. Since launching our M360 Enterprise Data Warehouse solution, we've made it our goal to provide credit unions with the means to transform their data into action that benefits members. One of our fundamental strategies is to partner with excellent companies that leverage data to serve their credit union clients. This webinar is a part of a series dedicated to showcasing the best-of-breed products and services of OnApproach partners. Our topic today is Life Event Banking, a data-driven approach to helping CU members better manage financial lives. Our presenter today is Mark Moore, General Manager, Vantage Real-Time Predictive Marketing. Mark has more than 20 years experience within the financial services industry at a senior management level, heading up global corporate strategy, marketing strategy, execution, and business development. As General Manager of the Vantage Real-Time Predictive Marketing business, Mark's focus is on solving the last mile for credit unions in terms of delivering an always-on, data-driven marketing service that integrates every element of an end-to-end solution, from predictive analytics to real-time delivery to ROI measurement. There will be a question and answer session at the end of the presentation.
Performance company. We've got a strong presence in financial services as well as within the credit union space. I'm actually a GM of a business within Vantage called Real-Time Predictive Marketing, or RPM, which combines kind of four major areas. It's a data-driven marketing service that brings together real-time predictive analytics that are powered by something called KLIs, or key lifestyle indicators, as well as integrates campaign management, the ability to deliver across all channels, not just the digital channels, but the assisted channels, and then ROI measurement, the ability to track new product openings, to track engagement, face value, economic value across all channels. And this is a managed service we provide that's tailored, again, just to the credit union space. Today's topic is around life event banking and really focusing a lot on forging those lasting member relationships, leveraging the rich first-party data that flows through credit unions and flows through your organizations, and using those as triggers to be there right at the moment when your credit union members need them the most. And that's really the focus for today. I've put together just some slides to kind of drive the conversation, drive the discussion. We'll also showcase kind of a dynamic live environment just to back up and emphasize some of these points. But there's kind of three main areas. The first is just a look at life events. We think of these as kind of the key moments of opportunity. And looking at those moments, we've got some information from a recent research study talking about credit union members and life events and some of their expectations from their credit union at these points in time, these key decision points. We'll also then transition into looking at the data itself, taking a data-driven approach to life event banking, how to leverage transactional behavior, lifestyle attributes, those sorts of things as those triggers, again, to deliver those personalized engagements across all channels for your members. And then lastly, we'll open it up to a Q&A session where, in terms of any questions that may come up along the way. Also going to showcase, again, just a live demo environment to show some examples of this kind of approach. But we'll start and first talk about life events in general. And you guys know this better than anybody. Individual members are on a financial journey, definitely looking for help in better managing their financial lives. And there's key moments, there's key opportunities. We think of them as really snapshots along this journey or along this path. If you think about the first step, and it's just an example here, for instance, newlyweds that are looking to buy their first home. You know, that's an opportunity, that's a milestone, that's a key decision point for, you know, financial management and what to do and some guidance there. You know, over a period of time, a little bit further down the path, you know, there may be thoughts around expanding the home, doing remodeling projects, or perhaps, you know, building an extension onto the house, etc. That's sort of the second snapshot along the way. Again, another opportunity for you to help guide them, to help provide some financial management, to help provide the right financial product at that point in time. And then, you know, again, further down the road, thinking about with those growing families an opportunity for savings accounts to save towards college, to save for education, those moments in time. So as we think about these life events, and these are just a few examples, there's many more along the path, that the key really is just looking at being there precisely at that very moment when they need you the most. As they're thinking about financial decisions, you know, thinking about which turn to take along the path, to have you there guiding them, and to doing it really and at life speed, as we like to call it. But there's some opportunities that we have here, and just kind of moving to the next slide. There's a recent consumer market banking report that was published by a technology provider called Segment. And this was a study of 2,065 bank consumers. And they were asked a lot of different questions around their financial expectations and expectations of their institution. And what I did was pulled out kind of at least some of the responses from credit union members and from other segments. And so for the first statement, you know, around expecting my credit union to provide me with information to help me make better financial decisions. This was specifically from credit union members. 81% strongly agreed with that statement. There's that expectation, looking to you to help with giving them the right information so they know which road to take, which path to take in terms of making those hard financial decisions. Looking below that, you know, a cut of data from millennials who indicated that, you know, they'd much rather have their institution proactively share that information, proactively share offers that's relevant to them, to their needs, versus them researching it on their own. So to push it out to them proactively, whether it's mortgage rates, whether it's auto loans, credit card offers, etc. So 62% of millennials either strongly agreed or agreed that that's really the path, the course that they're looking for. You know, and I guess the big takeaway from here is they're looking for help from you to better manage their financial lives, especially doing it in a proactive way. So that's the opportunity. If we just look at where we're at right now, perhaps as an industry, falling short in terms of expectations. And again, I shared just the credit union member breakout here as part of the study, as I thought this was interesting and very timely. In terms of the statement around, you know, whether my credit union provides me with information that helps me with my financial goals, helps me with life events, right? So those moments around saving for a new home, planning for college, planning for retirement, only 28% of credit union members said yes, which means that 72% didn't agree with that statement. And even more so, when you look below that, in terms of just getting a really good understanding, a good grounding in the diverse financial products that are offered by their credit union, only 22% of members said that they agreed with that. So 78% were saying that, you know, they don't have a good understanding, a really good grounding in terms of what's being offered there from a financial product perspective or a financial management perspective. You know, I guess the takeaway here is these are definitely powerful moments, and we view these today as kind of missed opportunities, and so opportunities to really seize those and leverage technology and leverage data to really get to that place where we all want to go. So going to shift gears now and just talk a little bit about this data-driven approach to life event banking, and to think about the data. And again, you know, our vision is to really think about these moments in time, these life events, these decision points as really an opportunity for us to become indispensable to our members. You know, that's really the focus that's really the goal to get there. There's a few key buckets that, as we think about this, we should definitely consider to help us get, to get us on that path. The first is to be data-driven. How do we harness, how do we leverage, how do we tap into that rich and powerful first-party data, those transactions, credit and debit card transactions or bill payment, ACH transactions, other banking information, all of those rich sources of data that's flowing through from a first-party perspective, to leverage that data, as well as becoming an opportunity to be more personalized in terms of our engagements, in terms of our messaging, and really personalized advice even more so. So to tailor that offer, to tailor that message, and to really have the ability to leverage rich personalization to make it relevant to me, to make it highly relevant to me, that's absolutely critical. And then the last piece is at life speed, right? If we think about this, as my indispensable partner, I want you right there side by side, or even better, out in front of me a little bit as I'm going down this path along this financial journey. I don't want you several steps behind, right? And so that's absolutely critical. So life speed and moving at life speed is essential to this whole proposition. As we think about data, think about ways in which we can connect the dots within the data, to think about things like transactional data or behavioral information. You think about the credit and debit card transactions. We'll go into a few examples in just a moment, where you think about bill payment data, as well as online banking data, rich data that comes out of data warehouses perhaps, and look at things around behavioral lifestyle attributes. All of these, and connecting these dots and mixing and matching data elements allows you to do a few different things. It allows you to identify those life events, to look at those key moments in time, right? To identify them ahead of time, that's critical. And then also to take action on those things. So to use the data as triggers, and again, to do it in a way in which you really are able to connect with your members from a digital standpoint in ways maybe you never imagined, as well as in the physical channels, which you do well today. So looking about pulling together those key elements of data, finding those markers in the data, and then activating that data is absolutely essential and critical to this. Just to go a little bit deeper on this concept, so as we think about connecting the dots within the data, when we think about some of those essential data sources, we start to drill down a little bit, a couple levels deeper here. First, your banking data, so things like member information, product catalog, of course. If you think about deposit accounts, deposit transactions, those are rich sources of data. And again, we're talking a lot about first-party data. But even probably more important are things like credit and debit card transactions. And you'll see this come to life in just a moment. But looking at things like consumer spend, or business spend, and transactions along that are strong sort of markers, again, of different things going on in people's lives, of behavioral attributes, of life events. And we'll get into that in just a moment. Bill pay and ACH transactions, again, a very rich source of data. It's an opportunity for you to view some of those held away relationships. It's a window really into seeing relationships even with other institutions that your members may have, because of those month-over-month bill payments that are going out the door. You can see that they have a credit card with one institution, perhaps a mortgage with another, or an auto loan with a third institution. Those are opportunities, again, allow you to kind of give you a window and give you some transparency into that to take action upon and to pull into the mix. And then there's other data sources. I talked about data warehouse, talked about data from CRM systems, maybe the other analytic models that you have, et cetera. But all of these things come into the mix. And then when you can leverage things like machine learning, or leverage perhaps data science, or even just leveraging some of the analytic teams and methods and methodology, you start to look at spending patterns, particularly in the transactional data. Start to see maybe over a compressed period of time, and we've got a few different examples in the presentation here, just identifying some of those life events, again, at a point in time when you can actually do something about it. We can look at things and see things like predictive behavior in the data. Again, looking at some of the historical data, but then also projecting forward with it. Those are opportunities. And then lastly, really as the topic at hand here, life events, starting to see some of those moments in time where you can capture the attention with a compelling offer, capture real relevancy with an individual member wherever they may be, right at that point in time where they need you the most. So I'm just going to talk about this a little bit further and just move into sort of an example of this. And this is a data visualization from the RPM service, but this is just one approach, one example, just to highlight some of these things. And when you start to think about transactions and think about transactional data, you really have an opportunity to look at mapping individuals to specific categories. So when you look at, for instance, credit and debit card transactions over a period of time, you can start to see some behavior. Perhaps if someone's having a lot of spend, at Home Depot or Lowe's, as an example, they may move into a home improvement category. And as those transactions stop, by the way, they are then moving out of that category. Again, these are the real-time or dynamic sort of triggers that you can use to define campaigns, to set up campaigns, and then use them as a way to deliver messages across different channels. So this colorful wheel, which we refer to as a starburst, has a variety of different color bands around it in different categories. And we'll start, we look at the orange area, and these are really just the banking products that individual members have. If we start to drill down into different areas, for instance, we can see in this case, I had an overall total population of 1.3 million, but as I drill down into different product categories, I can see, for instance, for basic checking, I've got an audience of 647,000 members, or for gold checking, 256,000 members. Again, we've just mapped individual members to the product catalog. It's important in terms of campaigns and setting up campaigns, but this is probably not the most earth-shattering part of this. If I think about, just from a savings perspective, for instance, I can see I have 410,000 members, that are in the audience or have a passbook savings product with us. So that's just sort of basic blocking and tackling. Some other areas of interest, and probably more interest, is when I start to navigate along this purple area. And these are really some of the competitive FI products. And we know this, we see this based on the ACH or bill pay transactions. So we can see, for instance, some of the relationships with other institutions. In this example, there's 19,000 members that have a relationship with Bank of America, or 33,000 members that have a relationship with Chase. From a credit card perspective, I can see that 13,568 members are paying off American Express month over month. Or from a bank issued credit card, for instance, there's 16,046 members that have a Capital One credit card. So again, that bill pay data becomes a rich source of data for you to potentially set up a campaign, turn it on, and start targeting those individuals. From a mortgage standpoint, I have 8,926 members that have a mortgage with Bank of America. So again, some of those competitive opportunities, as we like to think about it, that's a rich source of tapping into this bill pay data. And from an auto perspective, just an example, 26,784 have an auto loan with Chrysler Capital. So that whole purple area, the competitive FI products, again, harnessing your bill payment data is a great source of data from some of these, as you think about it, and start to set up even these life event campaigns and cross-sell and personalization campaigns. That's a great opportunity. This whole other blue area, which is about half the wheel, and again, I'll just pull out a couple of examples here real quick. This comes from the credit and debit card transactions, or the consumer spend area. And so as I drill into activities and interests, for instance, and you can see the wheel is resizing, and I drill down into different categories. Remember, again, as I talked about mapping transactions to individual members who fall in and out of different categories based on their transactional behavior. Here's a group that falls in the home improver category, 182,000 members, or even more specifically, can see how many are going on a regular basis to Lowe's. That's 84,138. Or to Home Depot, 85,368. We know this based on the transactional data. So again, this whole area of activities and interests becomes critical, again, identifying life events. And so we can see those things, and I'll pull out a couple of examples in just a moment, looking at life event data here, as we go through this a little bit. And those life events, again, looking at transactional data, we see, for instance, there's 196,000, or nearly 15% of my population that are considering a graduate degree. So that consumer spend, those debit and credit card transactions, absolutely a rich source of data. The last thing I'll point out here, and then we'll move back into the slide deck for a little bit, is just predictive indicators, these flags in the data, leveraging propensity models, and identifying audience who are candidates for a particular product. So in this example, in this audience, we're seeing 65,054 members who are candidates for our home equity line. 43,000 are candidates for a mortgage. So again, some opportunities to leverage those when we start to set up campaigns, particularly when we leverage life events as triggers as well, to tap into, and we'll go into more examples down the road. So I'm going to start, and I've moved back to the presentation here to talk about a particular life event and to talk about planning a wedding, which is a great opportunity for a lot of different financial products. But what really comes to mind are first mortgages. And when a couple comes together, oftentimes there's an institution that ends up winning in that. And it would be great to know this and identify this event ahead of time, at least, so you can present that right offer with that right message right in the moment. And so as we think about starting to analyze some of the transactions here, we look at credit and debit card spend, we look at bill pay and ACH data, and we do some of that analysis of those transactions, and we start to look at it over a period of compressed time and start to pull out some things that become flags for this life event. We may have seen, for instance, spend on jewelry, quickly followed by, for instance, money being put down on a reception hall. Again, we can see that in some of the credit debit card transactions down at the merchant level. We can start to identify these things and see these patterns over a short period of time. We might see, for instance, a transaction with a caterer. And of course, you can't forget the DJ, right? So some spend there as well. There may also be other data elements that when you connect the dots, remember thinking back a couple slides ago, things like teeth whitening, which, believe it or not, when you look at all of these different transactions across a certain period of time and connect those dots, it's a strong indicator of someone that's in that moment of planning a wedding. So there's a nice opportunity there to kind of go through that and really present them with a first mortgage as an opportunity or an offer. So I'm just going to show you an example of that. And again, this is just one approach in our world, and just use this from a visual standpoint of quickly setting up, leveraging those data elements and setting up a campaign that could be delivered targeting those things. So I'll start first and foremost leveraging some of the predictive models in terms of finding and identifying the candidates for my mortgage. And so you can see I've added the data elements down here to build up my campaign and mortgage candidate, which on the right-hand side narrowed my audience from 1.3 million down to 43,876 individual members. I'm then going to add the life event trigger. And as I go across the data, you can see some of the life events, again, that came out of the transactional data that we have to tap into. So I'm going to select planning the wedding as another trigger point, right, and part of the business rules or business logic. So you think about it, we've got these two things need to, in conjunction with each other, come into play in terms of the rules to deliver this campaign. One, they're a candidate for my mortgage, and then also they're in the middle of a life event of planning a wedding. Now, I'm also going to quickly just make sure that I exclude, members today that are already have a first mortgage with me and remove them from the campaign audience or campaign population here. So ultimately, I've landed on an audience of 600 individuals. Again, a highly captivated audience, a real nice opportunity to present that right message, right at that point in time as they're going through these decisions, thinking about this major life event and all of that. And so, again, this was sort of the key foundational elements of my first mortgage campaign to target individuals in this stage or this phase of their life. And the message may look something like this, talking about the journey beginning with the first step and, leveraging us, the credit union, for those friendly rates for first-time home buyers with the call to action to click for first mortgage offers. So, again, just an example, an opportunity of leveraging that rich first-party data, that rich transactional data, and tying it to a life event as an opportunity to build that relationship. Think through another example here, and just another life event that we think about, around a home remodeling project. This is something I lived through very recently and fell absolutely in the audience for this type of campaign. And now I'm out of that audience as well. And we'll kind of get into that in just a moment. But again, as we mine or look at the transactional data, those credit and debit card transactions, ACH transactions, analyze the data, the spending patterns, et cetera, you might start to see, again, over a shortened timeline or compressed period of time, some key transactions, some key markers in the data. You might see transactions at Home Depot, as well as, some spend or a transaction with a design and remodeling firm. Again, over this compressed period of time, that would be a clue for sure, as well as transactions at Lowe's. I lived this when we were remodeling a bathroom, going to both Home Depot and Lowe's, it seemed, on a daily basis. As well as, going to, for instance, perhaps Kichler Lighting to look at some of the lighting needs to support the remodeling project. And then in the Atlanta area, perhaps it's a store like Restoration Hardware. So all of these transactions across this, shortened period of time, again, would be a strong indicator to move individual members into that life event. Again, an opportunity to use as a trigger for a campaign. Just to kind of show real quickly what that might look like in the live environment, again, just in terms of thinking about some of the data elements we might pull together. Probably a couple of different things. If you remember before when I walked through the data and shared some of the predictive models or propensity models, so a candidate for our home equity, in this case, it was an audience of 65,000 members, but then using that as one trigger point and then adding to that in terms of the set of, equations to power this campaign, a home improver as well. So those individuals spending at Home Depot, at Lowe's, at Kichler Lighting, et cetera. So both of those elements would be key triggers for this campaign. And then, of course, we'd remove any members today that have a second mortgage with us. And this is an audience of 5,948 individuals that would get a targeted message that speaks directly to that. And again, these are the main elements that would make up just an example of a home remodeling campaign leveraging that data set. So the creative here, might look something like this. May talk about the home equity as being, there for you in terms of an available source of funds for you to tap into, ready for your home project. And then again, a call to action from the credit union in terms of clicking to look at the equity options that you have at your disposal. Now, there's also opportunities to go deeper with personalization, to mix and match different data elements to get very rifled in terms of the imagery you may deliver, as well as the messaging and the call to action and the offer. So we can continue to add data. Again, the source is coming from a lot of that rich transactional data, whether it's the credit and debit card transactions, or perhaps the bill pay data, et cetera. So an example here, those that are in the home improver category may get this kind of image, this kind of message talking about, making your house your home and, ready for your next home projects. So that's more of a higher level. Now you could add on top of that data other data elements. For instance, you may have insight into those that have families. Again, looking at the transactional data to identify those that have children. So you can layer that on top of and build your campaigns and your campaign audiences with this, much more rifled message and approach for those growing families that want to use the home equity funds in that manner. So it's kind of a more precise message and image for a segment of the audience, 762 individuals in this case. And then, there may be others that go even more narrowed or narrowing your audience, perhaps looking again at the transactions and the transactional data. You may be able to flag and identify individuals that fall into a category that make there's a lot of spend in terms of outdoor projects. Maybe it's at patio stores or, deck remodeling kinds of firms, those sorts of places where that 299 individuals would be served up this kind of image, talking about building that perfect outdoor oasis and using the home equity funds. So, just a different twist, again, with the same overarching goal around driving home equity or second mortgages, but doing a much deeper level of personalization across the boards there. And, just a kind of a nice example along those lines. Lastly, as you think about life events, and again, a third example, looking at those that are going to college or in the process of being in college, we have an example within the data around identifying individuals in that stage, in that phase of their life. And again, it's looking at some of the transactional data as identifiers, as clues or as flags in terms of those that are currently in that moment or that life event. So in this case, or in this example, we have an audience of nearly 30,000, 29,510 members, and it's a little more than 2% of my total population. But we can drill down even further, and we can, basically even start to narrow the audiences even further around, again, if we have that transactional data and we can see that spend, perhaps we can identify that they're seniors based on the types of purchases that they're making with the debit cards or credit cards, et cetera. We may identify, and that's an audience, by the way, of 9,000 or so members. We may identify that they're graduates, so we can see that 5,398 of them, fall into that graduate sort of category. Again, knowing specifically where they're at along their financial path or financial journey is critical. And then as a result, you can deliver tailored banking products to those individual members, to those families, whether it's getting them started, postgraduate in a checking account, or just, emphasizing things like mobile banking, the convenience of mobile banking, or other products, credit cards, et cetera. Again, these are just 3 different examples of life events, that become those critical trigger points for you, and to leverage and harness, especially that first-party data, to get there, to use as a way to, not only deliver the right offer at the right time, but this deeper level of personalization. So as we summarize here when we go through this, I would just sort of go back to really 4 major areas that we've talked about. The first at a high level is around life events being these key moments of opportunity. If you remember back with some of the survey data, and you remember there's strong expectations, to get critical information to help members make those financial decisions. They're looking for that, they're expecting that. In addition, for them to be, educated in terms of the financial offerings that you have, those key products that will help them along their journey or their path. And probably most importantly, with regards to life events, it's being there at life speed, right? To be able to deliver it in the moment at that point in time. In terms of our opportunity and better anticipating their needs, there is that opportunity to leverage the data, to not only leverage the rich sort of product data that you have, but also the transactional data, the credit and debit card transactions, bill pay, ACH data, as well as other data, perhaps segmentation models that you've built, some personas that you're leveraging, those sorts of things, but pull all of that first party data in there and start to leverage things like, machine learning and some techniques within data science to even perhaps and start to map individual members to specific categories. So as they fall in and out of those categories based on the transactional data, you can take action on that. You can deliver those highly personalized messages with images and offers to them, right in those key moments that we talked about before. We've spoken about connecting the dots and just really bringing all of that together. And some of it may be bringing together transactional data with some of the lifestyle or life, attributes data as well. So, if you look at, for instance, some of the consumer spend data, you may get a real good sense of perhaps somebody, falls into other different categories, such as, an outdoor enthusiast or someone that travels a lot, or someone that has a very active lifestyle. Again, that based on looking at the transactions and where they're spending and, over a period of time and the frequency of those transactions. So as a result, you're able to really get very rifled and personalized in terms of the messages that you deliver. And the end result of that becomes great relevancy across the board. So, just to wrap up again, I think as we talked about today and showed you just a few different examples, looking for those life events, looking for those as triggers to deliver those personalized opportunities, personalized engagements across channels, and, to use those as really means to trigger, campaigns and campaign activities across different channels. With that, Pete, I will open it up for any questions that the audience may have.
Great, Mark. We will take questions now via the chat or the questions function. I have a few here that have already been submitted here. What would you say, Mark, are some of the biggest obstacles that credit unions face today in tapping into the life events to provide financial advice? Sure.
Yeah, and in some of the conversations and discussions that we've had, Pete, seems to be one of the biggest issues is just access to the data. Oftentimes data will live in different silos, et cetera. So, getting access to data, being able to look at it in real time, and then also to be able to quickly, deliver, set up those triggers and deliver, at life speed. So deliver sort of a message, that offer, in the moment when somebody's there, not, 6 months later, 6 weeks later, even 6 days later is too late. So access to the data is going to be critical, but also to be able to, the flip side of that is delivery, to activate the data, to do something about it, and then to deliver across different channels, not just within the credit union's own properties, but also the ability to go out beyond that, to go out, even across the internet where members may be. So, reaching them where they are in their lives across different channels. But it starts with access to the data, quite frankly, and, finding ways to kind of get to that and then harness that and turn those into campaigns and get them out there pretty quickly.
Okay. Question from the audience, how does this tool integrate with campaign management software? An example was giving here is Pardot. I hope I'm pronouncing that properly.
Sure. Yeah, well, in terms of the service, so there's kind of two major components to this. The first is the analytics side, and, I just showcased some of it, and this really wasn't intended to be a demo as much as just showing some examples with life event-based banking, and just visualizing the data and some of the concepts we were talking about. But there's an analytics side of it. So as you saw, identifying and even defining those audiences that are there essentially in different life stages, life moments, or fall into different categories. So there's a side of the solution anyways that we offer that's just an analytics only side. It would allow you to sort of export those findings to your own, if you wanted to leverage your own delivery mechanisms, you certainly could. And so there's a way to look at the analytics piece and delivery. Now we have integrated campaign management into this, at least from the digital side of things. We have the ability to deliver across the public website, private website. We can allow you to reach out across what we call the open internet, which is millions of websites in a secure and anonymized way, but then also have through APIs the ability to push some of these targeted messages to your own assisted channels, whether you're using an email marketing system or direct mail, as well as to your branch systems and call center systems. We'll push that same message, but it's delivered and fulfilled on your side. So, we're flexible. I mean, we have some relationships around the analytics side. A lot of the conversations are around end-to-end with analytics and delivery, but have tried to, make sure that we're preserving your investment in your infrastructure as well. So.
Okay. So in terms of maximizing the life event banking opportunity, what are the most critical aspects? Is it relevancy, being real time, both?
Yeah, and I would say, Pete, it would be great to have both. It really should be both. Timing is a real big issue, I have to say, and I know a lot of us, just as consumers, experience this, right, where long after, and I can use my own self as an example, long after, we looked at leveraging home equity and actually went ahead to fund that home improvement project months after the fact, still receiving offers for that. That's an issue. That's a problem that actually works against you, right? So timing is absolutely essential. Life events, don't become as powerful. In fact, they can be counteractive if you're after the fact, right? Remember, as we talked about walking down the path, at least side by side, but quite frankly, really even out in front, ahead of the individual, that timing is absolutely critical. Right message, right offer, at absolutely the right moment in my life when I need you the most, not 6 months after the fact. So timing's key. I would tell you relevancy as well, though, and they're kind of interconnected. Having a message that's personalized to me, that really knows me, that goes beyond just a generic message. Yes, you happen to know that, I was in the market for a home equity, but also really personalizing it, that's sort of a slam dunk. And so we like to talk about both. Again, transactional data will help you with that. They'll help you get very rifled, very personalized, but also help you reach me right in that moment when I need it across whatever channel. So.
Okay, great. What transaction streams are essential for doing this kind of thing?
So, really the things that we often look for, the things that you should look for, debit and credit card transactions are a great source, right? If we think about that colorful wheel that we call the starburst, that whole blue area, which was really half the wheel, those consumer spend indicators, that's critical, right? That allows you to see all kinds of things. You can see things, and we even use the example of home improver and then drill down even to seeing audiences of 84,000 or 85,000 individual members frequently going to Home Depot or Lowe's. That's a great thing. I can use that to quickly define a campaign, launch a campaign, target those individuals with a second mortgage offer. So those debit and credit card transactions are great. I'd also say bill payment is a wonderful thing. We've been engaging with some credit unions today on the pilot front, where we're taking even 3 months of their anonymized data. And really, a key thing that we like to grab is that bill payment data, because we can see those held away relationships. We can see those month over month payments to other institutions. That's low hanging fruit. That's a nice opportunity for the credit union to start to target those individuals with competing offers or to leverage it for a cross sell of other banking products. So those elements are kind of key and things that are pretty crucial from a transaction stream perspective.
Okay. Just a note to the audience, if you have any questions, please feel free to use the chat or the questions function. A question here is that how else can we leverage data as triggers to become that indispensable partner to our members?
Yeah, and I think, you know, when we think about this, and we talked a little bit about the personalization, you know, to being creative and mixing and matching different data elements, you know, for that personalization. You know, we can look at transactions, for instance, again, using credit and debit card stream as kind of a source for this, start to see somebody that's having a lot of spend at an auto repair shop. You know, you can see over a shortened period of time that that individual had went there and had several visits. You might be able to layer on top of that an opportunity to present them with an offer for an auto loan. You may also see in the transactions perhaps that someone's going to an auto parts store a lot, or doing things to, you know, in terms of really being classified as almost an auto hobbyist, you know, somebody that's very much in tune with working on their car a lot, etc. So you can use images and messaging that's really personalized in a much more compelling way in that manner. So again, you know, we look to kind of mix and match data elements, transactional data, yes, but other things you may know about in terms of lifestyle or life attributes that are critical, that create, you know, a level of personalization that really kind of resonates and rings true. And then at the flip side of that means that somebody's more compelled to take an offer to open up that product and you know, solidify the relationship and engage even more with you across different channels.
One of the things that occurred to me that you had said that is kind of, I think, an issue with a lot of online types of campaigns or any kind of campaigns that use data to try to pinpoint these life events. You mentioned on the Home Depot example where someone's buying a lot, it's clear they're doing something, you may craft a campaign around remodeling or some such thing, and then they stop. And then you say to yourself as a marketer, well, they're done, I'm not going to send them any more appeals along these lines. But it seems to me that that's pretty tough discipline to have for a marketer, because as we all have experienced online, you've already purchased something that you were browsing for a while back, and all of a sudden you're no longer in the market for that anymore, but you still get all the appeals for that. What do you think about that part on closing off, using the data to determine that the prospect, the member, is really no longer in the market for the thing that you'd like to offer them?
Yeah, it's a great point. It's a real life example. There's some other offers that I'm still getting today that not only aren't relevant, are really quite driving me the other way, quite annoying. But that connection from the credit union, so that data feed, that push, you know, at the very least needs to be sort of daily or nightly, right? So you've got to have that window. So the marketing systems have to have that window into that activity, that transactional behavior. And obviously there's business rules, there's business logic that feeds that as well, but that at the very least sort of daily or nightly push from the credit union data platforms to that marketing system is critical. Otherwise, you know, that window into it isn't there, that connection isn't there, and as a result, the campaigns may still go out over a period of time. In our world, we think of campaigns, it's kind of a different paradigm from my prior life, where I, you know, focused a lot on seasonal marketing, you know, and there was definitely defined periods of a campaign. In our world, because there is that daily, nightly, or even up to real-time connection, we think about campaigns in this always-on state. So you set them up, you may set up and load a number of different concurrent campaigns that are sitting there ready and waiting to fire across any channel whenever there's that real-time data match. But the key to all that is you've got the system that's pushing out the marketing offers, marketing messages, or engagements needs to have that direct connection to the credit union, and that push is essential.
Okay, great. Well, I don't see any further questions. I want to thank you, Mark, for your help today. I think it was very interesting. I think this really is the place where credit unions need to go to better serve their members over time. And since the credit unions do have this data in many cases within their walls, it's a possible thing. And I really think that Vantage is something that is very, very important and very valuable to credit unions. So I hope everyone enjoyed today's session. Follow-up email will be sent to field any further questions, and then there'll be a link to the other pertinent information, as well as a link to the recording of this webcast. I'd like to thank my colleague Mark Ports for handling all the behind-the-scenes work for the webinar, and again, thanks to Mark Moore and Vantage for your participation today, and thanks to everyone else for your participation in today's presentation. And look out for future OnApproach webinars that will also have some valuable information for your credit union advancement. Thanks very much and have a great day.
Thanks, Pete. Thanks, Mark. Appreciate it, everyone. Take care.